Good afternoon, everybody. My name is Anurag Shah. I'm the CEO and the co-founder of Aureus Analytics. We are a big data analytics company. Our focus is to bring big data analytics at the point of decision making for insurance companies. While we could do this for several industries, our starting focus is on insurance. Okay. What are the key problems? Let's look at the insurance industry today, the way it is getting evolved. Several issues that they face, primarily around revenue assurance, loss of customers, distribution optimization, customer analytics, understanding who will retain, which are the customers that will stay, who won't, fraud, a big issue, and claims and reserving. So these are some major issues that, thank you. What is available today in the market are several solutions. There are tools that help big data technologies, very technical. There are analytic tools that are more like back office operations. So piecemeal solutions are available. Okay, so what do? We bring all these together into a single unified platform called ASAP, which means Aureus Statistical and Analytical Platform. The platform is a single platform which has analytics capabilities, specific domain knowledge, and also built-in predictive models. We have several products that are built on it. I'm going to focus on one product called Opera, which is mainly focused on persistency. Let's look at the insurance market, what it is going through. On an average, this is a global statistic. Globally, insurers lose 18 to 20% of their customers every year. This is approximately a $400 billion loss for insurance industry worldwide, right? What is it that we can do? These are some of the things that I'm pulling out from some of the work that we have done with one of our leading customers. It's a large Asian insurer challenged with a high rate of lapse or persistency, which is an insurance term. What we do for them is essentially bring data out, several data sources, internal and external. Internal data sources are not new, policy, payment, claims, but more importantly, the interactions, right? How do they interact with the insurer? The insurance industry has this big issue. Unlike banks, they don't have a lot of transaction data. The only time customers give maximum information is when they make a claim, right? So other times they need to actually search for data about their customers and identify what they can do with it. Look at social, look at macroeconomics, look at weather depending on the type of insurance, regulator data, pull all that data together. Then we have our algorithms that are predefined. Our data scientists have built these algorithms to do the predictions of which customers are likely to lapse at aggregate level, and then you can drill them down to the last customer and policy level. So you can actually get to the level where we say it's a one view of the customer, all the things that has happened with the customer, with a clear reason, what is their sentiment, are they likely to lapse. Now imagine, all of this data is available in the hands of a call center executive, a marketing head, a relationship manager. When he's talking to a customer, he knows exactly, is this customer going to renew? Yes or no? If no, why? What should I do to make sure I can try and retain that customer? In addition to that, what we also do is once we know that there is a customer at risk, we create a very interesting concept called householding. It's not only the customer who's at risk. Most of the times, they also influence risk to other people, maybe in their family, maybe in their network. So it's not only the single risk. You should also look at risk that gets impacted to all the people that they know. Who are the agents that sold them? So agency analytics find out which are the best performing and the worst performing. All of this is happening in real time at the point of decision making and not as a post facto after the event has occurred. Right? And as I said, all of it is happening on your mobile device. It could be on a tablet, it could be on phone, it could be at any point. Very simple. If we bring, and we are doing that already, less than 1% improvement in retaining customers, that normally means at least a couple of $1 million in saving per year for the insurer. Globally, this market is roughly about $9 to $11 billion in size, as I just said. The losses are much, much larger. So insurers do spend this money quite easily. There are roughly 10,000 insurers in the key countries, and the maths is out there for you. to look at. So it's a fairly large market and a real business need that they are facing. How do we do it? Business model is fairly simple. We do go and implement our platform one time, and then our products are on a subscription basis. If they see improvements in their retention, they continue. If they don't, too bad, we walk out. So it's a very low risk for the customers to try and work with us. And then, of course, we end up doing some customization. Obviously, we have some competition from different areas, technology products, services companies. What sets us apart really is the models, the algorithms that we have built over a period of time with a lot of research and study. We are the only company who offers a combination of a platform and products. And that's really what is different, because then we can scale and add several additional elements to it. And the biggest difference is available at the point of decision making and not post facto. I think that's the big difference that you see in the industry. In terms of traction, we just completed last week our first year, so we are a year old. We have 1 active paying customer, 2 POCs, and about 600,000 in pipeline. More interestingly, we also have a partner channel. We've signed up 2 strategic partners who put our platform into their insurance products. So they are selling insurance products, and they put our platform into it to offer it to their customers.